Hi everybody, welcome back. It's fall. Everybody is hopefully back to school, back to fall routines, and we're getting to the time of year that is open enrollment. And so today we're going to talk about health savings accounts to help make sure you have the information that you need to make a good decision when your employer comes around with open enrollment paperwork. So generally, when you are choosing a health insurance plan, you have two options. You either have an option that has a higher premium, so more out of your pocket on a per paycheck basis, but you're going to pay lower deductibles, lower co-pays, a lower maximum amount out of pocket. Alternatively, you can generally choose a plan that has a lower premium, costs you less each pay period, but has higher deductibles, sometimes catastrophic higher deductibles, and that plan is where HSAs come in. Granted, not all lower premium plans are HSA eligible, so definitely double check. But the idea is that you can be paying a lower premium for a plan that's not going to cover your little everyday things, but will cover you if you go out and get hit by a bus. And you invest the difference in premiums into a health savings account that you control. So what does this have to do with taxes? Well, within limits, of course, money that you put into a health savings account is tax-free. So if you're contributing through an employer plan and it's coming out from your wages, it won't be included in your taxable income on your W-2, but it will be noted in box 12 of your W-2, code W. If you are contributing to a health savings account independently, there's a deduction that will be taken on your tax return. So you're not paying tax on those dollars when you make the contribution. So you may say, well, medical expenses are deductible anyway, right? Sort of. They are. They rarely help you. Medical expenses are an itemized deduction. So first of all, you have to be itemizing. There was a video about that a few weeks ago. I will link that here. So you have to be itemizing. And if you're itemizing, you can include those medical expenses, but they're going to get a haircut of 7.5% of your income. So if you're making $50,000 a year, the first $3,750 of medical expenses out of pocket aren't going to help you. So there are quite a few hurdles to jump through in order to deduct medical expenses. So contributing to a health savings account is deductible even if you're not itemizing. Even if you're not over that 7.5%, it doesn't matter. The health savings account deduction is outside of the itemized deductions. So basically you're taking your medical expenses that you wouldn't really get any tax benefit from just by itemizing, and you're making them a deductible expense. Again, assuming you have an eligible health plan. So a common question is it use it or lose it? Most people are very familiar with the flexible spending accounts where you are putting money away into a flexible spending account to use for medical expenses under a more traditional plan. HSAs are not use it or lose it. The funds can certainly be used right away for your medical expenses. However, they can also remain in that HSA instead. They can even be invested. A lot of the HSA companies will allow you to put some of those funds into an investment account, put it in mutual funds, let it grow, and have it there as a nice nest egg in retirement to help you pay for more expensive medical care as you age. So those earnings come out tax-free. So those funds that you put in today can grow to any multiple, and as long as those funds are used for medical expenses, they will come out tax-free. So how much can you put in? For 2023, and these limits go up a bit every year, it's $3,850 if you are the only person that your plan covers. If your plan covers your family as well, the limit is $7,750 for this year. And if you're over 55, you get an additional $1,000. Be really careful though, if you are married and your spouse is on a plan that is not HSA eligible, if you are also covered under their plan, you won't be able to do the HSA. So definitely consult a pro to make sure that you're eligible to contribute. So should I go the HSA route? That's a very good question. You really have to weigh your own usage of your medical coverage. If you use your medical coverage a lot throughout the year and it's paying for a lot for you, you're going to want to stay on a plan with the higher premium that's going to cover a lot more for you. But if you rarely go to the doctor and you're able to, cover some of those little things that do come up out of pocket, it's certainly worth considering. But it's definitely a very individualized answer, and you really need to look at your own usage. Also note that if you are on a Medicare plan, HSAs are not an option. Is there anything that I didn't cover? Any questions that you had that I can tackle? Unrelated to HSAs, are there any questions we could tackle in a future video? Definitely let me know. I hope that you have a wonderful week. Like and subscribe, and I'll see you next week. Thanks. Bye.